Hi, this is Zak Mir with the US Chartbreakers for Wednesday, the 5th of April here at Zak's Traders Cafe. Starting off with the S&P, where we've paused above the old last resistance there from March, around 4080. Above that, we're still looking for 4200, and then as high as 4320 by the end of next month. Nightmare scenarios that we have to test the 50-day moving average again, or even the 200-day line there, currently around 40.20 and 39.40 respectively. But ideally, we get away with the support coming in at 40.80 or so, and then heading higher. Moving along to the stocks, and the rug pull of the week so far has been with C3, rather nasty rug pull. But what's interesting here is that even though we had the pullback from the top of that rising trend channel from September, we've actually found support so far around the 2380, 2390 area, which is the uptrend line from January. So above that, this is a dip to buy into rather than a sell situation, even though there's obviously been a nasty bull trap through $30. Below the $23 area then risks a test of the main support at 2050, but brave traders probably be looking to for that line to hold there from January, and the 2380 zone and the 50-day line to hold on C3AI. Situation which is not quite so fraught comes up next, and it's Bellerophon Therapeutics. Here we've got a rising trend channel here from the beginning of the year. Great looking pattern in the sense that the consolidation we had after the initial March move has actually been up rather than sideways. But the next breakout there through $8.30 could lead the shares up to $17.50 as soon as the end of this month. So very strong looking situation. We don't get many of those in the markets in any commodity or any stock for that matter. Moving on to another stock which has been covered here quite a lot recently, Bullfrog AI. Here we had this spike up to $9, back to test the old resistance around $5.80. While there's no end-of-day close back below 580, we still have a chance of a rebound, maybe back up to $7 or $8 over the near term. Otherwise, below 580 risks filling that gap down to the 470 area. That's the gap from the start of the week. Other stock which is on the move at the moment is Cardylix, and here you can see that the shares have managed to gap through their 50-day moving average after a bear trap rebound from below the November support there at around $3.70, so bear trap gap reversal. Above the 50-day line around $5.40, we're looking for a retest at least of February resistance around $8.80, and obviously you've got the 200-day moving average just above there at 920. Hopefully that will happen, that upside will happen during the course of April. We've also been backed by bullish divergence, so we had lower lows going into April, but the RSI already starting to climb, and that has provided the technical momentum on that situation. Another stock which is getting a repeat viewing or airing is Duos. Here we've followed through on the breakthrough the 200-day moving average around $3.60. Above that, we're looking for 550, which is the top of a rising October trend channel, and that could be seen as soon as the end of this month. Ideally, there's no breakback below the $3.60 area and the 200-day moving average. Next up, we got IONQ, and here the situation is that the shares are making good on their recent breakout through the old resistance there from February, which was around the $6 mark. Above 6, we're looking for as high as $8.50, which is the top of that rising trend channel from October, and hopefully we'll see that target hit, a technical target hit, by the end of this month, or perhaps even sooner. New name to me and to the Chartbreakers is Inflarx, and here we've got stock which has turned around in quite dramatic fashion until got to the upside through the now rising 50-day moving average. 200-day line already rising. That implies that while we're above the old initial January resistance around $3.30, we could see further decent upside. Top of that broadening triangle from last year is currently pointing to as high as $5.50, and ideally we see that by the end of this month. So let's see if Inflarx will come up with the goods. Just three situations to go now. First one is Pyxis tankers, and here we had a gap through the 50-day moving average. That's now starting to curl up. Unfull gap to the upside, and above that line, which is currently around $5.30, we're looking for the top of the trend channel from last July as high as $7, and maybe we could see that target hit over the next 4 to 6 weeks. Certainly back below $5, really killing the idea of an ongoing breakout for the shares. The next contender is Regencell, and here we've got line of resistance just above the 200-day moving average from last August. That's around $30.80. Looking for an end-of-day close above that to then open up the prospect of a move to $40 or maybe even as high as $45 by the end of next month, i.e. we're looking for the kind of move that we had last April, May to be repeated over this April, May. Stock which is actually behaving logically at the moment is US gold, and here we've got a situation where the shares are clearly tracking the recent revival in metals, precious metals. We already hit our target there. We had an initial target there around $5.80. The next target was up to $7.40 or $7.50. That 1-year resistance line projection. An end of day close or a weekly close above 750 could take us up to a new target over the next 1 to 2 months as high as $11.50, which is a resistance line projection from December 2021. This stage only well below $6, and recent support for the shares really delaying the upside scenario. That was a resistance on the way down, so $6 logical as a potential support on any retracement. That's it for me today. More updates tomorrow.